Hey everyone, welcome back to Corporate Decoder. In this video, we are going to dive into the recent shareholder report from Thrivent Mutual Funds and their Diversified Income Plus Fund. It is supposed to give a good snapshot of how the fund performed, but I am not sure we'll get a good picture of it before taxes. Let's jump in. The report covers the year that just ended, December 31, 2024. It is basically a report card letting investors know how the fund did, what it cost to run it, and what it invested in. First, let's talk about costs. For the Class A shares, it cost about $96 for every $10,000 invested. That translates to an expense ratio of 0.93%. Now, Class S shares were cheaper, costing only $71 for every $10,000 or 0.68%. Remember, these are just the operating costs, not any sales charges you might have paid up front. So how did all this translate to actual performance? For the past year, the Diversified Income Plus Fund returned 6.81%. Now, before you get too excited, remember that is before any sales charges that you might have paid. The report also says it beat its peer group benchmark but trailed behind a broader market index. What that means is it did well, but there was money to be made elsewhere. Of course, 1 year doesn't tell the whole story. The report includes a table showing how $10,000 invested 10 years ago would have grown in the fund, as well as in a couple of benchmarks. You can see the fund grew, though it did not match the growth in the market as a whole. Looking at average annual returns gives another perspective. Over the past 10 years, Class A shares averaged 3.45% including sales charges, while Class S shares averaged 4.19%. Both trailed the returns of broader indexes, which were closer to 10%. Some quick stats. The fund had almost $976 million in assets with almost 2,000 different holdings. The portfolio turnover rate, which is how often the fund buys and sells its investments, was at 50%. We can also see the advisory fees paid. It was about $5.2 million to run this thing. What was the fund actually invested in? A big chunk, about 7.9%, was in the Thrivent Core Emerging Markets Debt Fund. There were also U.S. Treasury notes and mortgage-backed securities from Fannie Mae and Freddie Mac. Looking at the overall portfolio composition, long-term fixed income made up the biggest part at 68.9%. Common stock was at 14.8%, and investments in other registered investment companies accounted for 9.9%. So this is a fund that is weighted towards safety and not really positioned for high growth. Breaking it down by sector, mortgage-backed securities were the single largest category, followed by financials and U.S.-affiliated registered investment companies. U.S. government and agencies were also up there. It looks like business as usual. There were no material changes to the fund during the year, so nothing to discuss. Also, no accounting drama. There were no changes to the fund's auditor and no disagreements with them. That is always good news. The report also includes an opinion from PricewaterhouseCoopers, the fund's independent auditor. They basically signed off, saying the financial statements are presented fairly. Now let's move into legal land. The fund has a code of ethics that applies to its top officers, and there were no changes or waivers granted during the year. It is also worth mentioning the report confirmed Robert J. Chersey is the audit committee financial expert. Next, let's take a look at what the fund paid its accountant, PricewaterhouseCoopers. In 2024, the audit fees were about $29,000 and tax fees were around $8,000. That's for this fund. Remember that it's a tiny fraction of a $1 million plus bill from the parent company. Finally, the report says that the fund's top executives believe that its disclosure controls and procedures are effective. There were also no significant changes to internal controls that would affect financial reporting. Now let's step back and ask a question. Who is this fund for? On the one hand, it offers some stability by investing in a mix of asset classes, including a hefty allocation to fixed income. On the other hand, its long-term performance has underperformed the broader market. This tells me that it might be a good option for conservative investors who are looking for income but do not necessarily need huge growth. However, there are a few things that you should also be aware of. This fund invests in emerging markets and that there is the chance of falling due to rising interest rates, in part through investments that are over the pond. If you are deciding whether to allocate some of your own savings to the Diversified Income Plus Fund, I would be sure you are comfortable with these significant risks and that you can use them to your advantage. Thanks for watching. If you enjoyed, please subscribe, like, and comment.